Hey, architecture firm owners and emerging leaders. Get ready for unparalleled insight into the development of a world-class architecture firm and a worldwide organization driving the digital transformation of the design and construction industry. With Build Smart, the podcast that's changing how our profession operates. We share the incredible stories behind innovation in the building industry with my friend and co-host, Patrick McLamey, FAIA, former CEO of the international architecture firm, HOK.
You know, Yamasaki's office or firm lasted during his lifetime. And when he passed away, I think that was the end of the Yamasaki office. Helmut did not want that. He wanted a firm that would live out and grow beyond the founders.
In Season 1, discover the untold stories behind HOK's meteoric rise, from 150 employees in St. Louis to a powerhouse with over 1,900 staff members and 27 offices worldwide.
You know, they weren't as polite as the Kojima people. That was just boom. And anytime you have a creditor, whether it's Kojima or the bank, that wants their money, unless you can raise money someplace else, you are out of business.
Bankrupt. And hold on tight for Season 2, where Patrick takes us on a new adventure as chairman of Building Smart International, shaping the future of digital transformation in the design, construction, and operation of built assets.
Ian Howell, Ken Harold, and I, Ken was my technical representative from HOK. The three of us took a tour of Europe of 5 cities in 5 days. Very busy time.
Simply follow the link in the show notes to subscribe to Build Smart now and uncover lessons that will transform you and your architecture firm. Hey, architecture firm owners and emerging leaders. Get ready for unparalleled insight into the development of a world-class architecture firm and a worldwide organization driving the digital transformation of the design and construction industry. With Build Smart, the podcast that's changing how our profession operates. We share the incredible stories behind innovation in the building industry with my friend and co-host, Patrick McLamey, FAIA, former CEO of the international architecture firm, HOK.
You know, Yamasaki's office or firm lasted during his lifetime. And when he passed away, I think that was the end of the Yamasaki office. Helmut did not want that. He wanted a firm that would live out and grow beyond the founders.
In Season 1, discover the untold stories behind HOK's meteoric rise, from 150 employees in St. Louis to a powerhouse with over 1,900 staff members and 27 offices worldwide.
You know, they weren't as polite as the Kojima people. That was just boom. And anytime you have a creditor, whether it's Kojima or the bank, that wants their money, unless you can raise money someplace else, you are out of business.
Bankrupt. And hold on tight for Season 2, where Patrick takes us on a new adventure as chairman of Building Smart International, shaping the future of digital transformation in the design, construction, and operation of built assets.
Ian Howell, Ken Harold, and I, Ken was my technical representative from HOK. The three of us took a tour of Europe of 5 cities in 5 days. Very busy time.
Simply follow the link in the show notes to subscribe to Build Smart now and uncover lessons that will transform you and your architecture firm. My name is Mark R. LePage, and you are listening to Entre Architect Podcast, where each week I speak with inspiring, passionate people who share their knowledge and expertise, all to help you build a better business as a small firm entrepreneur architect. KP Reddy, welcome to Entre Architect Podcast.
Hey there, good to see you.
It's great to have you here. This is going to be an interesting conversation for me. This is a topic that I'm really interested in. I love business and startups and the VC world and all of the stuff that goes along with it. I've been following that sort of that environment for a long time. Since college, I've always been interested in startups and how they work. Today, actually, I didn't even mention this before we started here, but my son just launched a startup. And so he just graduated from Syracuse University, and he and a friend of his have launched a new company. They're in New York City and doing the whole venture capital thing. And so
no better time.
Yeah, it's exciting to watch him grow. And so it'll be really interesting to have this conversation as well, to share what venture capital is and how it works and sort of how architects might be able to benefit from it. So
for sure.
Looking forward to that. Let me introduce you to anybody who may not know who you are. KP Reddy is the founder and CEO of Shadow Ventures, a seed stage technology investment firm. He's a globally recognized authority in AEC environments, AI, robotics, automation, mobile applications, and cloud computing. KP, his background is civil engineering, and he wrote the textbook on BIM with his book, BIM for Building Owners and Developers. KP formerly ran enterprise transformation at Gehry Technologies, which exited to Trimble, and was the general manager at ATDC at Georgia Tech, one of the oldest technology incubators in the country. And when I reached out to my network for recommendations on who to talk to about venture capital in this environment, this AEC industry that we're in, KP's name just kept coming back. I reached out to my network and they said, talk to KP. And so I'm really excited about this. KP has grown and exited 3 technology companies. So if you're an entrepreneur architect and you're interested in learning about how to grow and fund a successful tech company in this AEC environment, there may be nobody better to talk to than KP Reddy. So I'm really interested in this. Great to have you here, KP.
Thanks. No, that's. I'm glad there's interest, right? I always wonder. Like I love what I do, and I get excited about it, and sometimes I wonder whether other people in the industry are excited about it.
Well, me for one, I am interested. So it's. I know that there is a small but very, very enthusiastic community of small firm architects. Well, actually, it's a very large community today, but a small segment of that larger community are very interested in this topic specifically. They have lots of great ideas, but they have no idea what to do with them.
Yeah.
Architects are creative problem solvers, and so that's what business is all about. Before we jump into that conversation, because I want to sort of talk about the basics and the process and all of that, but I want to know more about you first.
Sure.
KP, what inspired you to do what you do? Maybe who or what inspired you to do what you do? Share that.
Yeah. So the running joke is I was born this way. So my mom was a computer programmer and my dad was a civil engineer.
All right.
So,
perfect combination.
Literally genetically bred for this business, so to speak. But really where it started was my dad had his own firm. And when I was 13, he bought a computer, and a professor friend of his sent him a floppy disk with some structural engineering analysis software. And he looked at me and he's like, make this thing work. Like, I don't know, like unbox it, figure it out, make it work. And back then software, there was no such thing as a UI, right? UI was command line.
Yeah.
And it was just very clunky. So I built an interface for it to make it simple for anyone to use. So
how did you know how to do that?
I just taught myself, and I had my mom around, and
you were just interested.
And and back then you did have, bulletin board communities, and you had different ways to learn, but mostly books and trial and error and that kind of thing. Right.
Yeah.
So just trial and error, built an interface for it. So that was like my first product, so to speak. And I had to support it because my dad had other engineers that had never seen a computer in their life, kind of thing. And so kind of learned that way. And then by the time I got to Georgia Tech, I kind of decided I already know how to program. Why would I get a computer science degree? You don't need a degree to program, but you kind of need a degree to design buildings. So I'm going to go into civil engineering. So I went to Georgia Tech, did civil engineering. The weird serendipity that happened was the Georgia Tech civil engineering program was actually the first school to have classes on the internet. 1991.
Wow.
And
very, very early. Yeah.
Yeah. So I was like the technician in the computer lab on campus. And my advisor said, hey, there's this thing called the internet. I need you to help put class notes and everything in this thing called HTML. And we're using a Mosaic browser and all this stuff. And Little did I know, right? Little did I know. I was like, I was doing what my advisor told me to do.
Yeah.
So that was kind of the beginning of it, right? And graduated, went into traditional civil engineering. The difference being I really struggled with the upward mobility as a young engineer. Like, how do I graduated, I was making $26,000 a year. And I said, this is dumb. Like, I went to all this college and like, why, like, how do I make more money? Right.
Yeah.
Went to my boss. He's like, well, there's two ways to make money in our business. You can be the guy that brings in business. You can be the engineer that's known for bringing in business, or you can be the engineer that's highly specialized and, top in the world. And I was like, well, I think I'm pretty good. But, at 23, thinking about being the best engineer of the world is like, that's a 40-year journey, like not excited about that. So I decided to be good at bringing in business, and I was good at that. And I figured out how to implement technology. In our firm, we had one computer that everybody shared. And I started doing instrumentation in the field. I started using building software to do hydrology and like just all this stuff. I was like, I don't want to bill hours. I was like anti-billing hours.
Yeah.
And I just felt it was like really personal and weird. Like, you're tracking my hours and you're selling my time. I don't like it. Like, I was just very averse to it. So I did that for a few years and left and started a startup to do construction management on the web. So 1997, I've got a web-based platform for you to manage all your construction projects. I started the company with a cash advance on my Discover cards of about 60,000, borrowed a couple bucks from my mom. But other than that, it was like 60 grand in the bank. So that's all the money I had to get going. And quickly the contractor said, internet, that's a fad. It's for playing games.
Right. Yep.
It's dumb. Right.
The architects were saying the same thing in the late 90s.
Right. And if you think about back then, you had the Panasonic Toughbook. It was like $7,000. Like, if I can't use this computer if I can't use the internet in the field, it was just very, very tough. So I started to run out of money, and I was just super fortunate. Ran into some folks in the telecom space, and they said, oh, construction management's like project management. Telecom had just been deregulated. We need to deploy switch gears and do all these projects. We want to use your software. So next thing you know, MCI, WorldCom, Sprint, Nextel, they're all using my software.
All the companies that knew what was coming down the line.
Right.
Yeah.
So next thing you know, we go from 2 guys to 1,200 people and went public.
And how long did that take to go from that initial conversation to going public?
3 years.
That must have been an exciting 3 years.
It was insane. It was insane because, one, it was it was the .com era. There was a lot of that.
Right.
There was a lot of, young founder. I was 28 years old. It's funny. My kids always ask me like that, like, why do you have so many friends in Atlanta that are rap artists? Like, you don't even listen to rap music. I'm like, because we were all dumb, young, and rich at the same time. Now we're just like, all we do is complain about our kids now. But at the time, like, we were the guys running around and doing stupid stuff and buying cars and all that. So that's our only intersection. But so it was fantastic. And then, decided, I was kind of done. 9/11 happened. It's tough running a public company. I think most founders that say they want to IPO and run a public company really don't know what they're signing up for. I remember looking back, it was like 6 months, had not talked to a single customer, and I had not talked to a single employee that was not in HR and accounting. And I was like, this is not what I want to do, right? This is not being on it, but it's good for some people, not for me.
Yeah.
So I left and then took like 2 years off. And I had some friends that were like, oh, you need to check out this company, Gehry Technology Corp. It's really cool. You should invest. And I was like, yeah, I want to invest. And had a meeting and then went on vacation for 4 weeks. Came back and they were sold to Autodesk.
Oh, missed the opportunity. Yeah.
And so I looked at that and I was like, these are the same people that said the internet was a fad. And I looked at BIM. I'm like, this is very complicated. And it can become even more complicated if you want to make it more. I don't see it happening overnight. I think there's something there. So I started a BIM consultancy. Then we started building some products around BIM. And it was very focused. Through my book, I talked to so many owners and developers about BIM, and they were just so far removed from BIM adoption. They're like, oh, I don't care what my architect uses. I don't care what they draw in. That's not my problem, right? But we started to see interest. And so I wrote a book, and through that, we built a firm. I ended up selling that in 2009 to a group in the Bay Area, and then commuted to the Bay Area for 3 years. And that's when I started getting exposed to, I would say, predominantly the Indian community in Silicon Valley. Mm-hmm. So what you started finding was in Silicon Valley back 80s and 90s, the Indian community was really the CTO, the VP of engineering. Mm-hmm. They were rarely the CEO. And so I started working with this community, mostly Indian origin in the Valley, that had been the CTOs of Sun Microsystems or whatever. And they were kind of saying like, hey, I'm ready to be CEO this time around. I don't need that guy. I can be a CEO. Yeah. So built a great network there. Did that for about 3 years.
And you commuted from
Atlanta.
From Atlanta.
And then shortly after that, some investors that were investing in Frank Gehry's Gehry Technologies called and said, hey, we need somebody that's actually built a product to kind of go help out. And so I commuted to Santa Monica for about a year. That was great. So did that, and then kind of took some time off. I was kind of like done. I was financially in a place where I was comfortable, intellectually in a place where I didn't really want to work. I went through a divorce and kind of decided like I'd been traveling all this time. And the one thing I wasn't feeling, the bucket I didn't feel like I was filling, was being a great dad. Mm-hmm. So I took 2 years off and was like, I'm going to be the best dad ever. And I was like at every PTA meeting, I was at every carpool, coaching the soccer. My kids will tell you like, Dad, that was the worst time of our lives. Like,
too much dad. Super dad.
Yeah, super dad, like cooking fresh meals and breakfast and trying to get them to be vegetarian, like all kinds of stuff. So
yeah, but in 5 years from now, because they're in, you said 19, 20, somewhere around there, right? Yeah. About 4 or 5 years from now, they're going to remember that time, and they'll remember it as the best time of their lives for sure.
They definitely do now. Now they kind of poke fun, like they get it.
Yeah.
But they poke fun, like, Dad, you were just getting to be such a weird, like, you're growing your own plants, and like, just, I became like hyper hippie at that moment. But so, and then, Georgia Tech called and said, hey, we want you to kind of volunteer at our incubator. And I was like, oh, I can volunteer. That sounds like something I can do between carpools. Right.
Yeah.
So did that. And then through a series of events, they said, hey, we want to give you a full-time job. And I was like, okay, great. Because, paying for your own healthcare is really painful. So that's fine. And then through another series of events, they put me in charge. And when they put me in charge, it was like a massive catalyst for me to kind of get off the bench and like, okay, there's stuff to be done here. There's things I can do. I can actually add a lot of value. But it's also where I decided I don't want to start another startup. Like I'm kind of done with that. I want to be more of an investor and have a portfolio. About that time, I started getting phone calls. So one of the first phone calls I got was from Thornton Tomasetti. And they said, look, we're trying to figure out innovation. And Tom Scarangello, who I think is chairman now of Thornton Tomasetti, but was CEO for a long time, he said, look, if we don't disrupt ourselves, somebody will.
Right, 100%.
And I want you to be that optionality of disrupting us. So can you help us? And so help them build out like what became their incubator program, spun out 6 companies for them. 2 have done fantastically well, pays better than structural engineering, so to speak. And so a lot of success there. And then I think other people were saying, hey, can you help us? Can you help us? Can you do this? Can you do that? And we did. And I did a little bit of that. But what I realized was like selling, I was back to like my original thought of like when I was in engineering, like selling my time.
Right.
Just felt pointless. It just felt really pointless. Like I only know how, and what if I don't want to? What if I don't want to spend my time, right? When do I get a break? So kind of the conversation led to like, I think I just want to start investing. So if you guys want to write checks, invest in my fund, let's go do this. And so then next, is Thornton Tomasetti and JB&B and Siska Hennessy and Hensel Phelps and Whiting Turner, like just boom, boom, boom. They all just said, yes, we love what you're doing. And we want to back you. And then a bunch of real estate developers kind of got behind us. And so we're off to the races. And I think this, what we've really focused on is seed stage, because we think seed stage is where you can have the maximum impact, where the know-how of building a company is really relevant. I can't help a company that's doing 100 million in revenue. I mean, I can. It's just not that interesting to me.
Yeah.
So when I started the firm, I kind of assembled a team that, like, my CTO, Matt, was the part of the initial team over at Constructware. I'd known him since college, since he was in college, not since I was in college. Known him for 15 years. Like, Matt, like, stop doing that. Come join the team. Nick Durham, who I'd met through Built Worlds, through their programs. He was running Built Worlds. I was like, Nick, like, do you really want to do events? Like, come on, let's go do stuff. And so Nick quit his job and came and worked for us. Manav worked at one of our startups. He was like, actually worked at two of my startups. Now that I think about it, one of them was a robotics one. And so I was like, hey, do you want to keep being a COO, or you want to kind of get scale? So, and then Ian, who's on our team, I've known since he was in college, he was pitching me his startup when he was in college. I was like, come on. Like, so it's really interesting. Our team, very much, our firm culture is almost like a family business. Both my kids work at the firm. They always have. They know everything that's going on. So we really operate like a family business, which is kind of not really that popular these days. Everybody's trying to scale and be big and all that. Like, no, we're going to be deep, and we're going to be, friends and enjoy each other's company and have fun doing work, Yeah.
Yeah. Sounds like a great plan.
Yeah.
So so Shadow is a venture capital company, right? So you invest in ideas, right? At seed means it's the very early, right? Somebody has an idea, they need some money to develop that idea into a company, right? That's how that works.
Yep.
Can you talk about that a little bit and sort of describe the process of somebody has an idea? Let's say we're talking to architects here. So let's say there's an architect out there. I got this great idea, too big for me to develop it into something myself.
Right.
How do I take it to that first step?
Yeah. So I think the biggest disservice that's been done has been people watch the creation of Shark Tank and people watching Shark Tank.
Yeah, inspiring but not realistic. Sort of the HGTV of venture capital.
Right.
For architects.
It's really, right. It's for entertainment. I happen to know some of the guys there. It's like, by the way, they don't invest in half of the stuff they say they invest in, right? And it's just not. But I think the first thing people have to determine about their idea is, how big is it, right? How big of an idea is it? And usually the size of the idea is related to the size of the problem, right? And unfortunately, people tend to have an idea to solve a problem that's just too small.
Yeah.
So there's a sizing thing. Then there's like a depth of impact. Like, is it a priority? And that's one of those things that you have to go do your customer discovery and really do your homework on. So the biggest thing I see at an idea stage is we're really evaluating the journey of the entrepreneur and their judgment and how are they thinking about things. And have they done all the work that can be done without needing money? Mm-hmm. And unfortunately, a lot of people, I would say 80% of people, they have an idea. The only effort they've put in has been in 5 slides. Here's the 5 slides that I'm pitching you with. And I'm like, so how many people have you talked to? Oh, well, I know and I would say this is a little bit problematic in our industry. Well, I know I've been in architecture for 20 years. I don't need to talk to anybody. I'm like, wrong answer.
Right.
And when I tell them, you need to go talk to at least 100 people and interrogate them, right? And of that 100 people, 90 of them are going to tell you it's a dumb idea. And you're going to dig into why. You're not going to stop it. It's a dumb idea. You're going to be like, why? And really those 100 interviews, I've never seen an idea that starts before the 100 interviews and is the same idea at the end of 100 interviews.
Right.
It
evolves. Right.
If it is, like if someone says I did 100 interviews and I validated my initial idea, then I'm out. Right. That shows a lack of adaptability and an inability to listen. Right.
Yeah.
And what you did is you just coached people to your answer. Right. So you have to I have this blog post I wrote. It's kind of like Everything you need to know about customer discovery can be learned by binge watching Law and Order, right? Because when you're interrogating, that's what I call a potential customer.
Yeah.
If you lead the witness, right, all the things, what are they doing? They put them in the box and they're trying to trip them up on facts to prove their guilt.
Yeah.
That's all they're doing, right? So you have to kind of have that same attitude when you're interrogating a market. You want to trip them up into getting the truth. If I ask you like, hey, would you like to be 30% more profitable? I mean, that's a dumb question to ask anybody. Of course.
Right.
The
Who's going to say
yes.
no? Right.
The answer is yes, right?
Yeah.
I'm leading the witness.
100% of people said yes.
Right. I'm leading the witness, right? But if I can dig into a conversation and trip you up, then all of a sudden I start to get to the truth. So sometimes my homework, especially with some of the younger crowd, like, have you watched Law and Order? They're like, what's that? I'm like, okay.
TV? What's TV?
TV, what's that?
I think my mom had one of those.
Like Sam Waterston, like, who? The guy from Blackish. Okay, that guy, got it.
Right.
So I think that's what we're starting to look for. And then really, there's certain companies, certain businesses that are venture fundable, and there's certain businesses that are not.
Yeah.
Architecture. Yeah.
Go ahead.
So the first decisioning, right, is product or service. If it is a service company, it is not venture funded. Architecture firms are not venture. And the reason being, for the amount of equity you give up, and we're going to take 10, 20% of your company. So if it's not a big enough idea that scales really well, there's no point, right? And most services companies have that attribute. To start an architecture firm, you need know-how, license, and a client.
Right. Yeah.
You don't really need much more, especially these days, right? It's not like you have to go buy a $10,000 CAD machine and drafting rooms. I've seen some firms, like 3-person firms, all 3 partners use Revit. They have no technicians. They have no accounting. They're doing fantastic. They have customers, right? They're doing car dealerships if they're interested in that, but they're making a good living. They didn't need any backing, right? So generally speaking, services businesses are not venture fundable. And I would say that is a broad understanding. That's a broad conclusion.
Sure. Yep.
What I would say is after that, then there's some things that I believe in that maybe other people don't agree with. I don't believe marketplaces and tech-enabled services companies are really venture fundable anymore. And when people want to argue about marketplaces, they're like, well, eBay was very successful. Angie's List was very successful. And I was like, okay, those are old, right? Setting up a website these days it's not hard, right? They were doing that when it was hard.
Yeah, right.
There's no friction now. And I was like, let's take a more recent example of a marketplace. Uber. They don't know how to make a profit. They've raised billions of dollars, high scale. We all have them on our phone. In fact, all of our rides have been subsidized by venture capital, right? Because we're like, oh my God, I can drive across town, ride across town for $5. Well, we all know it didn't cost $5. Somebody paid the actual cost of it. The VCs did, and now the public markets do, right? So those aren't successes because they can't they can't ever make money. And so we're kind of anti-marketplaces. And then tech-enabled services, I'm going to, like we see this in our world, right? Like with these like animation studios, like, oh, I want to take my BIM, I want to take my Revit model and turn it into an animation, and I'm going to send it offshore, and they're going to use some technology, but it's really people behind the scenes doing the work.
Right.
We don't really think those are really investable for venture.
Right. And when you say that, because you're sort of checking off all the boxes of things that really can't be, that are not venture backable, right? And when you say that, that's about scale, right? It's about how much are we going to get back for the effort and time and money that we're going to put in to these companies. And the things that you're going through are great, potentially great businesses, potentially multi-million-dollar companies, but they're not billion-dollar companies, right? They're not enough there at the other end for them to be worth the effort, or to take your money or divert your money from another type of company to this type of company, because,
Absolutely. So you have to think about, and you have to say motives matter, right? So if you're going to convince me and my team, what's our motive? How do we get paid, right? It's not our money. It's our investors' money.
Yeah.
And we get what they call carried interest. So what that means is if you give me $1 and I turn it into 10, or let's say simple math, you give me $1, I turn it into 11, I've made you $10.
Right.
I get 20% of that. That's what my cut is as a venture capitalist, right? So then you start thinking, if you do that math and you say, well, in 3 years, I need to make X million, right? So how does your company have to scale and be worth a lot in 3 to 5 years? It's got to be worth a lot. And unfortunately, like services businesses are typically based on get more customers, hire 2 more people, get more customers, hire 2 more. Like it's just the cadence is very, very slow. And if you look at it, a lot of it's driven by margin. If you look at most tech companies, margins are 60 to 90%, right? I mean, it's a different game. It's a different sport.
Exactly. That's unheard of in a service company. It's impossible.
Right. So that's why you see most services companies tend to be lifestyle businesses. Mm-hmm. And it's interesting if you track some of the public companies in our space. I mean, you're like, wow, they don't make any money. Like they just churn through this machine, right? And especially in services, which I think is really relevant to kind of the listeners, is if you look at most services businesses, your IP walks out the door every day, and you're really a labor arbitrage. That's really what it is. So how do you drive, $100 million business with 2 people, right? You can't in architecture, you can't in engineering, and I think a lot of my team, we actually have this advisory business. We have our investing operations, and we have an advisory business that we advise very large corporates on innovation and investing and due diligence, because they asked for our help. My team even says, like, God, you are so averse to timekeeping and the idea of a billable hour. I'm like, nope, we do everything fixed fee, and we align our interests with the customer, and we have to ask our customers, like, what does success look like? And put an economic value of what success.
Right. So let's say the architect that we're talking about has this idea, has checked those boxes that it's not those things that you just described. It's a product, right? So it's a tech-based product. And they've gone out and they've talked to 100 people, and the product, the idea has evolved, and now it's a different idea, different product. What's the next step? They come back to you and say, hey, I did those 100. I came to you, you told me to go do 100. Yep. I went and did 100. What do I do now?
So then we're going to look at the team, right? And one of the things that's been very concerning is you see subject matter experts, right? I'm an architect. I have this idea. I understand the market. And now I'm going to offshore my product development. I'm going to outsource it, right? And that is an automatic no from us. One, having run offshore entities and knowing how that world works, the fact that once a week I get a contract programmer that didn't get paid by somebody wanting to sell me their code for a penny.
Right. Yeah.
Because the customer didn't pay them, it's their code, right? The customer no longer has rights to the code. That's a once a week thing. So know that when you outsource, who knows where it's going, right?
Yeah.
Not that if you have a person in-house. So what we really want to see in those early days is a technical founder, right?
So somebody who knows what they're doing, is part of the team, is part owner, is ready.
Owner, right? Yeah. Probably equal ownership as the founder. So really a co-founder is on the keyboard writing code, right? We just think that is we've seen 0 ways to get around that. And so a lot of times the subject matter founder says, like, well, I need money to get that person. So I explained to him, like, if you can't sell a co-founder on your idea to give up their day job and do those things, then you're never going to raise venture capital.
Right. Because if you can't convince somebody to sign on and be a partner in this idea with the same vision and enthusiasm that you have, then you're never going to be able to convince somebody to help fund it. Let's take a quick break to say thank you to our sponsors for their support of this episode. This episode is brought to you by FreshBooks. There's a lot to love about being an entrepreneur architect, right? But trying to figure out our financials on our own is not one of those things. Luckily, we have FreshBooks, the all-in-one accounting solution that's built for business owners like us. FreshBooks takes all the not-so-fun parts of running a business, from building and tracking invoices, to managing online payments, to organizing expenses, and automates them with features like the digital bills and a receipt scanner, saving you up to 11 hours a week in the process. It's also super easy to get up and running, and the award-winning FreshBooks support team, they are always available to answer any questions along the way. Compare that to some of the other financial management tools out there. Try FreshBooks for free for 30 days, no credit card required. Go to freshbooks.com/architect to get started today. That's freshbooks.com/architect. So what will you do with 11 more hours each week? This episode is brought to you by arcat.com. We all have that one story, that one project that had such a unique situation that it required a solution that you had rarely considered before. We share these stories in private professional circles with our friends and our colleagues, but there has never been a collection of these stories of conflict and triumph all in one place until now. Detailed is a podcast series that features architects, engineers, builders, and manufacturers who share their insights and expertise as they highlight some of the most complex, interesting, and oddball building conditions that they have ever encountered, and the ingenuity it took to solve them. Join host Cereus Lakeside, aka CSI Kraken, a senior specifications writer at RDH Building Science, as she uncovers lessons learned to help you navigate similar challenges that may arise in your next project. Detailed, an original podcast by ARCAT. Listen and subscribe right now at arcat.com/podcast. That's arcat.com/podcast. arcat.com/podcast. Detailed. Every building has a story. Please visit our sponsors today and thank them. Thank them for supporting you, the EntreArchitect community.
And so what we always say is like, that's your first hurdle. Go find a technical co-founder. Go convince a technical founder. I mean, even if it's not quit their job day one, it's, I'll give you 20, 30 hours a week on the side, nights and weekends, to help you out and start building stuff and doing stuff.
Yeah.
And then we want to see that, that chemistry, right? Like I kind of gave the origin story of myself and my team, like, hey, I pulled up. Like, it's because I don't believe like talent is good or bad. I think it's just more understanding strengths and weaknesses and how people, like the chemistry of a team, right? So a lot of really good startups go through 2 or 3 technical founders. Turns out like we didn't get along. Turns out he said he was really good at X, Y, and Z. Turns out he's not, right? Turns out he's a great individual contributor, but the minute we hired 2 coders, all he did was rewrite their work. Like right. he didn't really manage and lead a team, right? Or whatever. So, you have those false starts. And so a lot of it is we want people to kind of go through those.
So how do you do that, right? So if I'm an architect, I don't know a lot of technology people, right? That I have this idea, I've done this process you asked me to do. I know it's a great idea. I have confirmation that it's a great idea. Now I need somebody to help me build that on my team. How do I find the right person to do that with me? Yeah.
So great places to hunt, hackathons, pitch competition. I mean, there's so many, like, I'm kind of, for the longest time, I was very anti about the social aspect of startups. I was just like, instead of going to a party, go write some code. What are you doing? Like, what are you doing here? And there's so many opportunities. There's always a hackathon. There's always events. There's always something going on.
So get involved in right? the industry. Go where the tech people hang out.
Right. And get involved. I mean, and I think it's fantastic too. Like, I think people go, I've been an architect for 20 years. What do I do? Hang out with these kids? Like, what's going on? Like, yes. And by the way, in your process, in your journey of hunting for talent and all of that, you will learn so much that you will take back to your day job.
Right.
You'll learn so much.
Yeah, because you'll experience new things. You'll meet new people. They'll teach you things. You can teach them things. And it's the common theme of everything that you're talking about right from the beginning of our conversation is about the people, right? It's not as much about the idea. Yes, you have to have a great idea. You have to confirm that that great idea is an idea that can be scaled, but it goes back to the founders and how much are they really willing to give up to pursue this idea, and how is the chemistry of the team that they've built, and that there is a team, right? It can't be one person with an idea. It has to be a team that is ready to execute on that idea.
Yeah, and I think that there's also a thing that people may or may not realize. So one of the things is we invest globally because we're very focused on a market. We can't focus on a market and only invest in Atlanta or whatever.
Right. Yeah.
People really think that they have original ideas and they're
Right.
solving original problems. What they don't know is I see 50 pitch decks a week just through our website, just through our incubator program and everything. I talk to 10 startups a week, every week. There's a pattern. You start to see the same stuff, right? And a lot of times from our perspective, it's like, okay, here's three people, three groups trying to solve the same problem. That's what you're competing with.
Yeah.
Right. How do these people stand up? And so much of it is judgment. Tell me about like your track record. And people are like, well, I've never done a startup, so I don't have a track record. I'm like, yeah, absolutely. Where'd you go to college? Tell me about your career. How'd you move up? What did you like about your career when you were? And one of the things that people really, really struggle with, I would say in our industry, is selling in a different way. As an architect, you're selling your portfolio and your experience and you and your team. It's the 254s and 255s, right?
Yeah.
That's the product, right? Which is very different than selling an idea or a software product or a hardware product that has nothing to do about you, about defining the value prop, understanding the selling process, and that it is a process. And that is very hard for a lot of people in our industry.
Is that an opportunity to find another co-founder that has that strength, that understands that process? Yeah,
sometimes. And I think that's where and I think, part of these journeys, right? It's a lot of self-discovery. I wrote this BIM book years ago. But a few years ago, I wrote a book called What You Know About Startups Is Wrong. And it's so funny because people see it, they go buy it, right? And they think it's like a handbook on how to do a startup. But they don't realize it's actually me trying to talk you out of doing a startup.
Right. Yeah.
It's really about, do you understand the sacrifice, right? And a lot of it's my own story, right? There's a reason I went through a divorce. Mostly because I'm traveling all the time and my startup was my focus, right? It was hard to focus on anything else. I almost died on a plane, because of stress, and became diabetic. There's all these things that I really, when I wrote that book, was understand this journey is not for the faint of heart. And the running joke is hey, if you're not going to read my book, have your significant other read my book.
Yeah, because
they'll
they convince you not to do it. Yeah,
right. They need to know. And a lot. It's just knowing what you're signing up for, right? That's all it is. And being in being in shape, right? Being in shape to take this next journey. You don't just show up to a marathon. It's just training. And so I think people get a lot of energy around the idea, and they just want to go do it.
Right.
And then they say things like, well, if I don't move, someone else is going to do it. I'm like, that's interesting. I don't know that I want to invest in something that's so easy for someone else to do. Right. So there's a little bit of these conversations that become a little bit challenging for people.
What if they make it through all those obstacles? They've cleared all those hurdles that you've given them. They have the team, they have the idea, they're ready to roll. What's next?
Then, basically it's me and my team evaluate the opportunity against all the other opportunities. We move quickly because if you look at our team, we don't really have analysts. Just about every startup we meet, either myself or Matt Ullman, our CTO, are the first meeting. I tell them I have people that help me with my work, but that is not your job to meet them. I don't want my team spending time. So most VCs, You go to an analyst, and the analyst has three
Right.
meetings with you.
Going through layers of approval.
Right. We don't believe in that. And I think it's partly because we're entrepreneurs. We're like that. We hated that system when we were trying to build companies, and why would we implement the same system?
Yeah. And it expedites the process, right? You don't have to go through all the, on both sides, right? You can evaluate more companies quicker and say, these are the ones that are interesting. These are the ones that are not. And same thing for the entrepreneur to be able to get a quick answer.
Absolutely. Over half so, I told you I do these 10 meetings a week. They're 30-minute calls. More than half of them end in 7 minutes. I'm just like, hey, I'm going to free up some time for you because this is not a fit and you're probably not venture fundable, and go back to the drawing board and let me know when you come up with something different.
Right.
And just some people get offended by that. They get like, well, I booked 30 minutes. I'm like,
yeah.
You want to talk about music? Like, what do you like? What?
Right.
There's nothing else to talk about here.
Yeah. Yeah. And just because it's not venture fundable doesn't necessarily mean it's a bad idea or even a bad business. It's just not venture fundable. It's just not something that is interesting to a VC whose business is to grow big companies.
Right. And we see this a lot, right? BIM services companies, drone services companies, and I tell people like, well, did you invent the drone, or no, I just buy them off the shelf. I'm like, you mean like my 19-year-old buys them off the shelf? Like, help me understand like what is, and it's like, it's not a bad business, right? It just means it's just not, our expectations of, we're trying to get anywhere from 10 to 100x our money back. Because remember, it's not about the 100x, right? I only get 20% of it. Right. That's what I care about. And 20% is not as much as you would think, right? A 10x, 20% of $1 million turns into 11. It's not bad, but I had to wait 3 years to get it, and since then I had to like cover my payroll. And, it's just the bar tends to be higher with venture. Yeah,
yeah. So how many companies does Shadow back? How many do you have currently on your portfolio?
We've got about
approximately.
Look at got about 20.
And what's a typical life of one of your investments? Is because part of the VC process is exit, right? Is that you need to get paid, and that's either somebody buys the company or it goes public, right? Those are the two options. So what's go ahead.
So that leads into a really good, I always tell entrepreneurs, like, you need to know our business. If you want to sell us, it's a really good idea for you to know how we operate, right? So what we do is we raise capital from investors, right? Like we just closed out our last fund last year, so we'll be raising a new fund soon. But we raise a chunk of money from investors, and then that fund, which is like an LLC, right? It's basically an LLP, lives for 10 years. So it's a 10-year cycle of that bucket of money.
Interesting. All right. So it's a limited time. They have got it.
So the first 3 years are your seed years, your deployment years. So we only deploy money really for the first 3 years. Then that middle tier is managing the portfolio. And we might leave some money just in case, right? Oh, it took, nobody ever hits their goals, right? It's just too early, right? It's nothing negative. It's just how it is, right?
Yeah.
So many unknowns, so many variables. So we keep a little bit of money to, like, if we have to come in and like help them out a little bit. If we still believe, it just took longer, great, we'll put a little bit more money in. So it's like 3 years of deployment, and kind of like 3 years of, you start to see harvest, and then after that, it's like, well, we need to leave a little bit of buffer for the things that take a little bit longer, right?
Yeah.
And so, we're looking, if you think about it, in a 10-year fund, like to say, let's make up numbers, right? A $10 million fund. I need one of those companies to return the entire fund. Just one investment should return the entire fund. And then the rest of it is like extra money, right?
Right.
So our goals tend to be like that 10 million needs to turn into 100, right? That kind of thing. And if you look at most venture firms, they always have one company, right? They have like, oh, we're investors in Google. It's rare. Sequoia's been fantastic, but a lot of them, it's like one company or two companies, and the rest of them went to zero.
Yeah, and that's typical, right? That's part of the business. That's why the bet has to be so big, because if you're investing in 20 companies, maybe 2 of them are going to pay back, and the rest of them are either going to. Go ahead.
Yeah, no, sorry. If you really want to understand this stuff, right? I really try to explain to entrepreneurs, like, you need to read, there's certain books you need to read, right? There's a new book out that I love from Tony Fadell, who was the inventor of the iPhone and founder of Nest, called Build. It's probably the best book I've read in 10 years. It's that good. It's just, he does such a great job. And it's just like, you can feel him in it, right? Yep. Like the angst of building a product, whether it was the iPhone or whether it was Nest. So there's certain books like that as an entrepreneur you should be reading. But also like knowing our business. So Venture Deals is a really good book to understand the vocabulary. Like, what's a term sheet? What's a convertible note? What's a price round? Like all of our language. Like you have to be prepared to speak our language.
Right.
Right. And then there's another book that came out called Power Law. And so Power Law is the fundamentals of how VC operates, which is what you were talking about, like 1 out of 10, right?
Yeah. And
so that's how Power Law works. It's all about like there's 1 or 2 deals that make all the money and the rest of them go to zero. So you're trying to bet that way.
Yeah.
For us, because we play seed stage and we have, over 160 investors, mostly from industry, there's a lot of companies we invest in that maybe have like 100,000 in revenue. And within 3 months, we get them up to $1 million in revenue because all of our investors become customers, right?
Yeah. Yeah.
And it's just a thing.
That's part of the business as well, is that when a VC invests, that they're bringing their experience and their contacts and their network. And so it's not just money that's being invested, it's time and effort and connections that come along with it as well.
Yeah, we just invested in a company, and the founder the other day was like, so many VCs talk about creating value. You guys are ridiculous. I think within a week, they met with 10 multi-billion-dollar companies, like at the CEO level, about their product.
Yeah.
And they were like, what do you guys eat? And I'm like, look, as a seed investor, we have to be willing to do the work. And we have to both have the attitude to show up and do the work. We also have to have the aptitude, right? And there's a reason why these CEOs of multi-billion-dollar companies respond, because they're like, oh, these guys know what they're doing. It's also interesting that we're now starting to see what we call generalist VCs. They know nothing about our industry, starting to follow us around because they know, like, you guys know what's going on. And so therefore we're going to follow you around. Because I think that there's one thing that's very unique about our industry that people either ignore or don't understand. I agree. I think there's some people that absolutely understand it. They just choose to ignore it. We are a project-based. So when startups talk about ARR, annual recurring revenue, and MRR, monthly recurring revenue, in our industry, it's generally a lie. As a startup, right? Autodesk can hit you up with annual recurring revenue, and you don't really have a choice because they kind of suck that way. They'll just like force you, right? But generally speaking, everybody wants to take us and think our industry is like manufacturing, right? You design and you build it, and we're like a factory. And my thesis is more like we're more like the movie industry. We all show up on a project. Maybe we've worked together, maybe we haven't. We're trying to feel each other out. Sometimes it feels like we've never made a movie ever, right?
Right. Yep.
And we feel each other out, and then we leave. And so for a lot of startups, they're really selling a project. That's why, like, every pitch deck we see in like construction tech, every pitch deck has Turner and Skanska on it. Well, why? Because they did one project,
right,
for Turner somewhere, right? They did one project with Gensler. It doesn't mean that Gensler has adopted their product globally and it's sitting on the desktop of every architect, right? And so what's interesting is some of the generalist VCs fall for that. They see the logos, they don't know what's going on, and they're like, oh, it's recurring. And so they chart this hockey stick, and then they're wrong.
Yeah.
So we believe in overcapitalizing our companies at the seed stage because we just think it takes longer.
Yeah. Yeah. This industry also is traditionally behind the rest of the world, right, in terms of adoption and technology.
Yeah.
So you're, somebody who doesn't understand the industry could look at where we are and think, oh, they're what a great opportunity. But in fact, they don't recognize that this industry takes a long time to adopt new ideas and new ways of doing things. And so that's part of the equation, right?
Right. And there's a reason for that. There's none of this stuff that, like, people want to talk about culture and all that. Like, okay, we all have been invaded by technology, right? We're using like, it's not like we're averse to technology.
Right.
Once again, it's motives, right? I was talking to the CFO of a very large public AEC firm. There is zero benefit to being more efficient when you bill by the hour. Your lawyer, there's no benefit to them to be efficient.
Right.
And in our world, there is really no benefit to be efficient. And I think part of that has been, I saw it with BIM adoption. So we have to spend all this money on software and train our people. In early days of BIM, architectural firms were billing customers for it. Like they used to bill for like CAD services back in the day.
Right.
They started billing for BIM, and that lasted like maybe 6 months. Like, and owners were like, "What? What is like? I'm paying you to be more efficient. I'm paying you to do a better job." And I think that's one of those things that a lot of industries struggle with. But I think also part of the culture of our industry is having a lot of autonomy, right? It's my project. I'm the project manager. And what that does, I've seen it with contractors. It's actually really funny. Contractors, the C-suite, the CIO will say, we're going with this software. And everybody at a project level is suspicious. You would think like, oh, well, corporate already vetted it. It's already been figured out. And great, I don't have to worry about it. They're suspicious. They're like, why did we pick that software?
Yeah.
Is he out hunting with the founder? Like, what did he get out of it? Like, I don't think it's that, And so what happens is there's this autonomy that then creates fragmentation, because we want you to run, the corporate says, well, no, it's your own business. It's your own project. You do what you need to make it happen.
Yeah.
Which is good and bad, right? What's good is a startup can have early customer adoption because you only have to convince a project manager. Then it's like, then it's hard, right? Because you're selling project after project.
Yeah.
One of our companies, Green Badger, they've been around for a minute, and they finally have gotten there, right? Now their customers are saying, hey, I did a survey. 80% of our projects are using your software. I'm like, yeah. Can we get an enterprise deal? Can we get a better price?
Right.
Which is usually the driver, right? Can I get a better price?
Right.
He's like, yeah, sure. If you want to sign up for a 3-year deal and blah, 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 happy to give you a better price. Show me some commitment, I'll give you a better deal.
So what does and I know we're running up against our time here. Actually, we're probably over our time. But what does the future look like? What does the future look like for the industry? And what does the future look like for Shadow?
That's a great question. I really believe this industry, the way we're going to keep talent in this industry is the entrepreneurialism and innovation. So I really think I'm calling for the destruction of large firms. I don't think they make sense, right?
Interesting.
You're
talking to a lot of people who are like, yay!
Well, I think it's real. You can do business with Gensler, but at the end of the day, you're going to get assigned a person and a team in a local office. And what did I get for the overhead of the brand?
Right.
Nothing against Gensler. I'm sure they do fine work. Right. And I think to go start an architectural firm tomorrow, you can outsource your accounting. Don't need an accounting department. There's software for that.
Yep.
Maybe don't even need marketing help. You can probably use tools out there for marketing yourself and CRMs and all this stuff. So you can start the barrier to entry to starting a firm is so low these days, right? Customer and knowledge. And if you're a customer, why do I want to work with a big firm where I'm just a number? I'd rather work with someone where I can text, the architect, right? I can text the team. And so I think where you see not just architecture, but a lot of industries is, what is the benefit of the large firm? What am I getting? What is the value? Because I know I'm paying a premium. Is that really what I want? And I think technology and flexibility, and especially now, post-pandemic, do you even need an office?
Right. That's been proven.
Cut the rent, cut the accounting people, cut the HR, cut all those people, right?
Yep.
And it's an architect having a direct conversation with an owner, and getting things done. right, and creating value. And so I think that's the future. I think for us, we're going to continue to raise money and grow. We do an annual event. It's our 6th year. The last 2 years we did it remotely at shadowsummit.co. This year we're doing it in person in Asheville, North Carolina. And it's really become one of these great events for people to not just meet our startups, but learn about technology. Because what we learned is AIA doesn't care about technology.
Right.
AGC doesn't care about, none of them care about technology. It's, it's one panel amongst 4 days. And if you want to learn about AI for real, like, you come to our conference like that. And we also do a good job of bringing people from other industries.
When is that? When is the summit?
October 5th through 7th.
Okay. We'll have links to all of this stuff, all of the books you mentioned, Shadow Summit and all of that. We'll have links to all of that on the show notes.
Yeah. So I think for us, I think our view is we're going to kind of continue to focus on early stage. We think that's where we add the most value. We're going to continue to add more and more strategic investors. We're in the middle of raising our next fund. And I mean, I was talking to my team this morning. I was like, can you imagine the people that are like chasing us we never thought, we're just like, oh, KP's doing this thing and, we're all going to go do this thing, And then, the inbound calls and then people wanting to meet with us, we've just been absolutely blown away. I mean, just super grateful that, I think the beginning, I think what we do is super important and fantastic. I'm glad some other people do too.
Yeah. Yeah, for sure. Especially seeing that it is in industry, right? Because the thing that you said earlier is something that I've agreed with for a long time, that if the industry doesn't adopt the technology and the innovation and become the leaders of that technology and innovation, we get replaced by that technology and innovation.
Yeah.
Right? Architecture could literally go away by our competitors and technology that's currently developed and is going to be developed in the future.
Yeah. And I do think there's a fundamental thing. I mean, most times I kick off when I do talks, we're the last industry that is creating a product that shapes the future of humanity.
Exactly.
And we get treated like shit.
Right.
And I have a real problem with that. And I think part of it is getting caught up in the minutia of how we do work and billing hours and SDs and DDs and CDs and specs, all that stuff is just the minutia of it all. But at the end of the day, we're literally shaping the planet. And we're the only, look, we throw away our iPhones every 3 years. We can talk about how innovative Apple is. They can't build a product that lasts them more than 3 years.
Right.
we have to deliver a product that's going to last for 20, 30, 40, 50, 100 years.
Right.
And still be useful, still have utility, still have a user experience. Yet we kind of diminish our own role in society. And I think, and it gets caught up in permitting, just all these really things that are a waste of our brain power, right? Some printing out 5 sets of drawings and taking them down to the county, oh my God, online AI, get everybody out of the way. Let me go
right.
Innovate and be creative and think about the future and not be worried about a wet seal and 5 sets and the fire marshal.
Right.
Do we really need to do all that?
Yeah. Yeah. And that's coming, right? Whether we like it or not, that technology's coming. And it is the thing that can make sure that we are the leaders, right? That we do have the influence and the impact on the world that we want to have.
I agree. And I think the challenge is I feel like we have a seat at the table, but we don't show up because we're too busy redlining drawings.
Right. Right.
We're back in the office. There's a seat at the table, right? And it's just no, we're too busy doing work to exert our influence. So what happens instead? The developers exert their influence.
Right.
It's these other people. And there's some fantastic developers out there. Some of our LPs are just fantastic developers, but we know that there's a lot of folks that aren't that fantastic. And they take our seat at the table because we're too busy doing all their work for them.
Right. Right. Yeah. Inspiring, KP. This has been a really interesting conversation for me. And I know that there are thousands out there who are also just so excited about what you just shared with them. I think there's probably also a bunch of people who are disappointed because they thought they had some ideas that they're going through the checkbox and they're like, well, maybe not. Maybe it is just an idea that's going to help me, not millions more.
Yeah, I think, look, patience and pragmatism are characteristics that for some reason we've all forgotten, but it's ingrained in our industry, and somehow someone will talk you out of it.
Yeah.
Well, the guy at Twitter I'm like, yeah, well, that's Twitter. Like they're not doing anything important.
Yeah. Yeah. So super inspiring. Thank you, KP. Before we wrap up, I just wanted to ask you the question that I ask everybody, and I'm really interested in your answer for this question. What is one thing that a small firm architect can do today, right now, to build a better business for?
I really think it is truly understanding their customers' needs. Like, what is the end game? It's not about how many square feet and how much usage and facades and all that. Like, what is the vision of this project, and what is the impact financially and to society? And really framing it as that. Like, what is this experience that I'm creating? And just really trying to hold that up front, and I think that solves everything else. And I feel like if we can be better storytellers and vision keepers,
yeah, that's
the future. His
name is KP Reddy, and the website to learn more about Shadow is shadow.vc. Shadow.vc. Go check it out. If somebody does have an idea and they've gone through that checklist that you gave us, and they think it is something that Shadow might be interested in, is there a process to connect with you?
You literally go to our website, right? My first cup of coffee is personally reviewing everybody that submits to their website. We just funded a company based out of India, and the founder, we had our first post-investment call, and he said, I never thought I could submit my information on a website and get several $1 million.
Yeah.
And I'm like, we don't want to waste your time. Like we're engineers, right? So very process oriented. So it's funny. A lot of people are like, "Oh, do I need some backdoor?" No, go to the website. You'll have better success in the website.
Yeah, yeah, and that's why I wanted to have you here on this episode, because, you also don't want to waste your time, and you don't want to waste their time, right? If it is truly an idea that could be venture backed, go to shadow.vc and go submit it, and absolutely, because you may have a couple $1 million next week.
And by the way, there's no such thing as too early. We have an incubator program. We just funded a company called Jet Build, which is construction management software. We incubated him for 2 years. He kept his day job for 2 years and did this on the side with us. And I said, dude, I'm wiring you $500,000. Go quit your day job. Go tell your boss, give him his 2 weeks.
It's time. Yeah.
So, we're very creative that way. So there's no such thing as too early. That's why we have our incubator as well.
All right. Very cool. Shadow.vc. We'll have links to all of the links and the books and all of that. KP, I appreciate you for spending all this time. This has been a long episode, and I appreciate you coming by and sharing your knowledge here. But also, in addition to just coming by the podcast here, thank you for doing what you're doing, because it's a very, very important role that you're playing in the industry. There's not many of you doing what you're doing in this specific industry. And it's very important to have a place where architects and engineers and construction pros can go to create those products, right? To take those ideas and that innovation that you might have in your mind and go build it. And so I appreciate you for being there and for coming by here today at Entre Architect Podcast.
No, thank you so much.
If you liked this episode of Entre Architect Podcast, please share a rating, write a review, go write a review. I would love to know what you think of this podcast, and it helps other architects find us. So go do 5-star rating if you like it, share, write a review. I'd love it. And share a link to this episode with a friend, because that's how we've grown. That's how Entre Architect has grown to serve thousands of architects throughout the world, just like you. Thank you to our sponsors, ARCAT and FreshBooks, for their support of this episode. I ask you to support them because they support us. And if they're supporting us, they're supporting you. So go support them. Got it? Go support our sponsors. Links to our sponsors, so you can click on those links and go right to them. Links to our sponsors and all the resources we shared today are available at the show notes for this episode at entrearchitect.com/podcast. All the shows are there. entrearchitect.com/podcast. Entre Architect is a member of the Gable Media Podcast Network. Gable Media is curated thought leadership for an audience dedicated to building a better world. Listen and subscribe to all the shows. I think there are 11 of them there now. Go there, gablemedia.com. That's G-A-B-L media.com. And I hope you're going to join us in Austin November 1st through November 3rd, 2022. Those are the dates for the EntreArchitect Community Annual Meeting, our first ever live and in-person conference for you, the small firm architect community. Visit entrearchitect.com/annual meeting right now to learn more. That's entrearchitect.com/annual meeting, and I will see you in Austin in November. Don't miss this. This is going to be great. entrearchitect.com/annual meeting. It's a conference for you, small firm architects. Thank you for listening today to this episode of EntreArchitect Podcast. Love, learn, and share what you know.
Imagine earning continuing education credits while doing exactly what you're doing right now. Well, you can. Gable Media has revolutionized the way you earn your continuing education credits with a groundbreaking approach. Forget running around town and scouring the internet for credit-worthy courses. Fulfill your CE requirements effortlessly by listening to engaging podcasts just like the one you're listening to now. Our podcasts are designed to educate, entertain, and inspire, all in a user-friendly environment. But wait, there's more. Architects, Gable Media is also approved as an AIA continuing education services provider. Upon completion, we handle everything, from reporting your hours directly to the AIA to storing your certificates in your personal Gable Media profile for your self-reporting needs. So follow the link in the show notes and start earning your credits in the most innovative and entertaining way possible with Gable Media.
Attention architects and creative minds, get ready to supercharge your brand with Build Your Brand, the podcast that's unlocking the secrets of branding success for creatives. Hey there, it's Mark Arlepage, founder of EntreArchitect, and I'm inviting you to join my friend, architect marketing expert Jeff Eccles at Build Your Brand podcast, where he explores the captivating stories of the world's top brands and transforms their lessons into powerful moves for small firm architects and creatives like you. In Season 1, Jeff shares the thrilling tale of Southwest Airlines, where he dissects their journey to the summit and distills it into strategies tailor-made for you.
It's important to keep in mind that companies like Southwest compete in the real world, just like you, and face real-world challenges, just like you. You might be surprised at how similar those challenges are to the struggles that you grapple with on a day-to-day basis.
Don't miss out on your blueprint for success. Subscribe, tune in, and let's build your brand together.
You may have noticed that the very best brands in the world are also known for having somewhat unique corporate cultures. That's often the glue that holds everything together when they encounter those rough spots.
We don't do it because it inconveniences the passengers to whom we are primarily dedicated, the short haul, frequent flyer.
Follow the link in the show notes to subscribe to Build Your Brand today. Remember, no matter the size, the journey's the same. Your brand's journey to the top starts here.